we're just 9% under its estimated as-is value. And most of these properties on our site are not, you can't do an interior inspection. So you're buying, you only have that people were buying with only a 9% cushion. That has started to come back up too, it's now at 17%. That's an indication to us that investors are being a little bit more cautious. Now, they're still bidding more aggressively than they did before the pandemic. I want to get through some of this, but here's some perspectives from investors who are using auction.com. And I would say the takeaway from these is that they're being cautious, but they're still you're seeing a lot of headlines now in the market that the market's about to crash, the market's in full correction territory, but our investors who are using auction.com, they're being cautious, they're being more conservative, they're building in a bigger cushion when they're bidding on properties, but they're still very bullish on the long-term prospects of the market, and they actually see, they see if there is a correction in home prices, they see that as an opportunity to buy more, is basically what these perspectives are saying. There's one guy there at the top in Atlanta who's been buying since 2000, and he's a little bit more nervous about the market, but he doesn't anticipate a crash. And then a couple other perspectives there that I won't spend too much time on. But I did want to get to the next section here is the distress market, what's happening with foreclosure properties. And this is important because it's, this is important to investors because these represent inventory that you can buy at a discounted price, and specifically foreclosures and bank-owned properties. So when we look at the top of the funnel for distressed properties is seriously delinquent loans, loans that are over 90 days behind on their payments. Those are candidates for foreclosure. And what we're seeing is during the pandemic, there was a foreclosure moratorium, so a lot of those were held back. And we're seeing that number come down. The red line there is total seriously delinquent loans. Those have gone down from 2.6 million at the peak to now under 1 million according to Black Knight. But at the same time, the bars there represent properties that are seriously delinquent, but they're not protected by the forbearance program that was in place during the pandemic, nor the moratorium because that's expired, and they're not in loss mitigation. So that number of at-risk properties, even though the overall pool of seriously delinquent is falling, the number that is really at risk for foreclosure is growing. And actually, they just put out new numbers on this yesterday, and that's grown again. So as of this, it was at 373,000 that I would put in that bucket of very high risk for foreclosure. Now that's gone up to 420,000 as of June, the end of June. So that number is growing. That means it's not a huge wave of delinquencies, but it is a growing number of potential inventory for real estate investors coming up. And so on auction.com, we have buyers, but we also have sellers. The sellers are our clients, who are the banks and the mortgage servicers who are selling these properties. So we also surveyed them. And most of them are expecting foreclosures to grow over the next 12 months. Maybe that's not a surprise. But what they're saying is they're expecting the biggest growth in the Midwest and the Northeast. Those are the two parts of the country they're expecting more foreclosures. And specifically, most of them are expecting the biggest increase in foreclosures on government-insured mortgages, which are FHA and VA mortgages. So that's what they're saying. Let's see here. I'll skip over this so we have time for the discussion. This is what I just said. Most of them are expecting more foreclosures. 74% expect an increase, slight increase in foreclosures over the next 12 months. 15% expect a substantial increase. Here's the distress market funnel I talked about at the top of that funnel. This is back in 2020, right before the pandemic. What's interesting about this is if you look at the numbers here, you see very similar numbers to today. You see about 2.2 million total delinquencies, and of that, if you go down the funnel, you see that there's, over on the right-hand side, there's about 90,000 properties that started the foreclosure process in the first quarter of 2020. Now fast forward to the first quarter of this year, we saw very similar numbers, about 2.4 million total delinquencies and about 90,000 foreclosure starts. The quarter before, there were only 20,000 foreclosure starts. So in the first quarter of this year, we saw a huge spike in the foreclosure starts from 20,000 to 90,000. Now the 90,000 is on par with what we were seeing before the pandemic, but so it's not this massive wave of foreclosures. However, it is an indication that some of that backlog from the foreclosure moratorium is starting to make its way through to foreclosure. We're seeing that in our own data. This is some of our own data. Now, one of the things here is that we're seeing, because people have more equity in their homes, on the right-hand side there, that yellow line is the percentage of homes that are scheduled for foreclosure auction that actually make it to foreclosure auction. Historically, that's been around 30%, so 30% that are scheduled actually go to foreclosure auction. That during the pandemic, that dipped to like 5% because of the foreclosure moratorium. It jumped back up, but now we're starting to see it come back down again, and I think that's because more homeowners who are delinquent have equity, and so they're able to avoid foreclosure. So that's one thing to be aware of there. And sometimes this doesn't work. There we go. We are seeing more of these canceled foreclosure auctions being rescheduled. So it's kind of this cycle that's happening. Getting to our foreclosure forecast is that we see 3 scenarios. This is going out to 2027. If there is a recession, which seems to be becoming more likely, we would see foreclosure volume increase there in the blue line. Right before the pandemic, we were seeing about 200,000 foreclosures a year nationwide, and which is actually an all-time low. That dipped even further during the pandemic, but now if we see that recession, we would expect those foreclosures to go up to over 400,000 a year at the peak, over twice that number. Now, if we see what's called a soft landing, which is the market slows down but doesn't have a huge correction, then we would see that the foreclosures come back up to the 200,000 level and actually make it up to 300,000 per year by the end of this time period. And then if the housing market just keeps going strong, no interruption, which is becoming less likely, we would see that that number flatline at about 200,000 foreclosures a year going forward. And then I'll just end with hopefully a couple practical things for you as you're maybe looking for where inventory is available. This is data from auction.com. So for the third quarter of this year, properties that are scheduled for foreclosure auction, the darker green are properties that are closer to their pre-pandemic level that have returned. Nationwide, we're at about 48% of our pre-pandemic level, so we're 50% below. But in some of these states, especially in the Midwest, we are seeing foreclosures come back more quickly. So if you look at Nebraska, for instance, it's actually above its pre-pandemic level. Colorado as well, and Minnesota up there as well, and Wyoming. So some of the states with smaller volume, but then even in Texas and Oklahoma and those areas in the Midwest and the Southeast are at getting closer to pre-pandemic levels. So that's where we're seeing more supply of distress come back. And whereas in California, we're only at 22% of pre-pandemic levels. So the supply is not coming back as quickly there. That doesn't mean it's not going to come back. It's not just coming back as quickly. And then there's two slides here. The one on the left here is the average discounts. I mentioned that earlier. So where the average discount below that as-is value of the homes. So what probably stands out to you on this heat map here on the left is that Nevada is blue, which means that our buyers in Nevada are actually paying 7 points above the property's estimated value. So Nevada may not be the best place if you're looking for a discount. Now, some people are betting that Nevada is gonna keep going up. But then if you look again, actually it tends to be the same areas where we see more supply in the Midwest and Southeast, where we're seeing the bigger average purchase discounts at foreclosure auction. And then on the right is demand. So if you're going to auction, how much competition are you gonna be facing? The markets that have the most competition right now are Georgia and Texas. We see a lot of competition there. Part of that has to do with the type of auctions they have there. But those are a couple of pieces for you. And with that, I will end and give you a couple resources. I have a lot more of these types of heat maps at auction.com/in-the-news. And of course, you can go to auction.com to actually search for properties, and then some heat maps there on Tableau. So I will hand it back.
Thank you, Darren. And since we have a panel talk, so we will invite Dr. Mr. He in here. And Mr. He received Architecture Design Award a lot. And he was interviewed by LA Time and Money and CNN before too. And they used to work together. So today, we will ask some questions to both of them. So the first question, how would the recession impact the U.S. housing market? Yes.
Yeah, recessions typically impact housing markets historically. Not necessarily, we don't see usually a big price drop like we did. Now we did during the last recession, 2008. That's not typical. Typically we see just a slowdown in home prices, maybe a 1 to 5% drop in home prices during a recession. But that's the main impact on the